My current situation is I took advantage of the forbearance.
Mm-hmm.
All of my steady income has gone, and I landed my first contract here recently, which is going to start putting money back in the bank account. I have until July before my forbearance is over. And my plan is to get out of the debt that I'm in, and I don't know if I'm going at it at the right angle. So I figured I'd jump on stage. I've got about 40,000 in credit card debt. I owe 170 on my house that I had appraised last year at 245 to drop my PMI off of. The Queen's business isn't off the ground and running profitable yet, and my income isn't steady at the moment. So I've got like this 4 months, 5 months here. I was going to try and curb a lot of the high interest debt in the credit cards
Mm-hmm.
without filing bankruptcy. I did manage to not miss any payments on anything. I have zero late payments ever on my credit history. And I took advantage of everything I could, which also reminds me I need to call and see if I can push payments because you got to wait like 6 months before you can push car payments again.
Hey, James.
So
James, let me help you out here. So it sounds like you've done a lot of things right, that you weren't late on anything, and now you're in forbearance. And when are you coming out of forbearance? Do you know?
July.
In July. And so what you're asking is what?
Well, I don't know what the P.I.L.L method is.
All right, the P.I.L.L method stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. What we do here at the P.I.L.L method is help people to cut their interest costs on their loans, not their interest rates. So people look at interest rates and they get fooled. Like you look at high interest rates on a credit card and you think that's no good. But when you do the math, you could find out that because it's a high interest rate, that the interest cost is not high, because you take the rate and then compare that with how much you owe, and then that figures out how much interest you are actually paying. You'd be surprised at the number of people I run into, James, that say, I have high interest rates on my cards. I say, okay, how much interest are you paying every month? And they'll say, I don't know. So because you have a high interest rate doesn't mean you have a high interest cost. And because you have a low interest rate on your mortgage, most of the time it actually is turns into a very high interest cost on your mortgage, even though it's a low interest rate. So that's one of the things that the P.I.L.L method teaches, is focus on the math and find out how much interest you're actually paying. And now we can do something about it. How does that sound, James?
Sounds right in line. I think when I did the math on my interest
Mm-hmm.
on my house, I think I was paying over 100% actually.
Yeah.
I bought it for 189. I think all said and done, if I paid it out over the 30 years, I'm paying 402,000 for it, I think.
There you go. And so what we're doing is we're going to show you how to disrupt the bank's timing so you don't have to pay them all of that interest. You don't need more money to get out of debt, James. You just need to pay less interest. And we show you how to do that with your current budget. How does that sound?
It sounds like the prescription I need.
Okay. So here's a couple of things you need to know coming out of forbearance. You ready?
Go.
Okay, so with coming out of forbearance, so the way to come out is to get a deferment. All the payments that you didn't make, have them deferred to the end of the loan. So which means if you went into this with 300 payments, you want to come out of forbearance with 300 payments by moving those payments to the end of the loan. Okay?
Okay.
All right. So that way you're going to be immediately current when you come out of forbearance, and then talk to your bank about their deferment or deferral program. And then that will help you to get that part done. The next thing we need to do is figure out how you can manage the debt that you have now. All right. Manage what you have now with the income that you have now. And we may be able to help you with that as well by doing what we call a savings report. So if you go to the link above our heads, ice10k.com, then you'll see a button there that says get a savings and earnings report. Fill out your information, and then let's see where you are in this thing and coming out of deferment. Let's see if there's something you can do to make sure that you're able to pay your bills. I'll give you some time to get your business up and running. So let me ask you another question. Have you taken advantage of the full 18 months available for forbearance?
No, my financer told me that it had 12 months. I started it in July.
Okay. If you're not ready to come out, if you're still having hardship, see if you can get the full 18. Okay.
I will check into that.
All right. I can already tell in your voice that you're a man that takes pride in paying his bills. And I'm going to ask you something. In 2008, there were some pretty big banks that took advantage of a program so that they would not go out of business. They actually borrowed money from the government so that they would not fail. And they paid that money back with interest. And now we're in the economy that we have today. If the banks can take advantage of a program to keep them solvent, don't you dare think you shouldn't be able to take advantage of a program to keep you solvent as well. Okay, James?
Absolutely.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.